Well, greetings to all my investment clients. My name is Walter Mazers, your wealth manager, CPA, tax advisor. I'm recording this on Sunday, September 21st, for week ending September 19th. Our weekly stock market recap. And as always, I'll need to read this disclosure statement at your leisure. Please stop the video and read this full disclosure about Trinity Wealth. And again, this is not intended as investment advice or solicitation to buy or sell any securities. Please seek investment advice if you're not one of my clients with your current advisor. So again, please stop the video, and even for my investment clients, read the full disclosure. If you want more background about Trinity Wealth Solutions and myself, you can go to brokercheck.finra.org. Okay, so that we got this out of the way, just want to do a quick economic overview as of September 19th, 2025. Let's see, I got the wrong. Okay. Pretty much stock market has been just going up and up, trending up. And as just a quick reminder to my clients, we are pretty much 80% invested in the stock market. When I'll go through the weekly stock market recap. Friday was a good day. I mean, the leaders are the Magnificent Seven. Federal Reserve did cut interest rates by a quarter point, 25 basis points. Some were expecting 50. And the reason for the cut was pretty much, let me go to monetary policy and economic data. They're concerned about the labor market is starting to weaken. Yes, of course, when you have revised jobs by 900,000 for 1 year, less jobs, and you hear over and over more and more companies starting to cut back. Two major oil companies announced a 20% reduction in their workforce. So that's natural that there is a concern for more now labor, employment versus inflation. There's really the big concern was about the tariffs are going to cause inflation. That hasn't happened. Again, reminder, inflation is always a monetary issue, meaning too much money chasing too few goods. I don't know why the Federal Reserve doesn't understand that. Yes, you can have short-term kind of looks like inflation, but that's not true inflation. We are not in that position, meaning we have plenty of products and services. What we lack is income. People are really concerned about your jobs. Wages have not kept up with the last 2-3 years of inflation. So that's the problem. And cutting interest rates by a quarter point is not really stimulate the economy. That's not we're going to stimulate the economy because that's not going to increase people's wages, and that's the biggest issue is people are just running out of money. Cutting interest rates is not going to increase somebody's wages. So unfortunately, are we heading into a recession? Things are starting to weaken. Every single week there's some bad economic data. So long term, I think the Federal Reserve is going to be forced to lower interest rates much quicker than what they're thinking. So let's get into the stock market. Let's look at Friday, how Friday's stock market did. It did very well. And again, reminder, I'm just comparing long duration bonds, QQQ, which is the technology ETF, SPY, which is the broad market ETF, and gold. And our clients pretty much have exposure to 60% of the stock market and 20% to gold. So clients' portfolio is actually doing very well. we're almost approaching. Remember what my target is long term: get a consistent 10% rate of return, and we're almost about there. What we've achieved the longer term, approaching 10% rate of return. Really, the last quarter, last 2, 3, 4 months have been very good. If you do log into your client portfolio, you can see a graphic visual that your portfolio has been consistently going up, but with some concern. So what did the market do Friday, September 19th? Well, gold had over a 1% rate of return. This is QQQ, technology, a little bit over 0.5%, and S&P 500 about 0.5%, and long duration bonds actually just flat, a little bit of a loss. We look at year to date. Again, gold has done extremely well. Remember, we got into gold, I think, September 2nd. Why didn't we get into gold? Because there was no, you can see, starting in April 22nd, there was an upside, and then it was just trading, up and down, up and down. So we got in September 2nd, kind of right here, where there was a definite trend up. And gold, again, probability, if things start to weaken the economy, people flee to safety, and gold is a good hedge for safety. So there's many predictions about gold. I don't know which direction it's going to go. Is it going to continue? There's potential another maybe 3, 4, 5% up. Could go higher, but we're just following the trend for our clients. So gold was a good addition for our clients. And then remember, S&P 500 and QQQ, we were there almost for 2 months. So we've been capturing not 100% of the stock market, but about 60% adding gold. So we're capturing like 80% of upside. But keep in mind, we are very concerned, because if you're capturing 80% of upside, you could capture 80% of downside. Now, that's not what we want. But remember, we have a strategy in place that we're targeting, that this is not guarantee. There's no guarantees. There's no certainties that no client suffers more than a 6% drawdown or downside, no matter what the market is doing. So if we look at 1 year, you remember April, there was about almost a 30% pullback. We were out of the market, and then we got back in, and now the market is trending up and up. Just a word of caution, people are just, as we say in the industry, on one side of the trade. And that's where you get concerned. When everybody thinks everything's just great, we're going to have a soft landing, there won't be a recession, everything's just perfect. God, Federal Reserve is going to be cutting rates, that's great. But they're forgetting that the real economy is really, really starting to stall. And at some point, the stock market could roll over. And again, we're kind of getting into seasonality, and the fourth, we're almost done with the third quarter. Fourth quarter, again, seasonality-wise, usually does very well. October can be very, very choppy, so we're kind of cautious right now. And we're relying on our research company, Technical Traders, to give us, trend. Is the trend up or is the trend down? We're still in a trend up, but we're getting to the point that there isn't that much more room that the market can go up. Can it go up another 3, 4, 5, 10%? Anything's possible. But again, word of caution, the higher we go, the greater the probability of some type of reset pullback. If we look at 5 years, again, there was a pullback, almost 30%, and then the trend is right now up. How long will that continue? Really, nobody knows for sure. So we are optimistic but with great caution that the market could turn over in a month, in a week or two. We really don't know for sure. So just real quick, let's take a look at long-term interest rates. If we're looking at 20-year bond, remember right now over the last, really since 2024, interest rate has kind of been trading in a range. So we're waiting for that trend line to break to lower interest rates, and that's where we will consider going into long duration bonds. We've kind of started. The Federal Reserve cut interest rates, and I think they're going to be forced to maybe cut interest rates faster than they're expecting, because the economic landscape, economy is really starting to slow down. So on that note, hopefully everybody had a great weekend, and thank you for watching the video. As always, if you want more clarification about your specific portfolio, I encourage my clients to give me a call. But so far, portfolios are doing very well. We're capturing 80% of the upside right now, but with lots of caution that it could market could reverse and start to go down. So again, there's no certainties, there's no guarantees in the stock market. There's just probabilities, and that's what we try to do for our clients. So thank you for watching. Hope to see you next week. Again, encourage clients to give me a call if you have further details or questions about your individual portfolios. Call me at 586-873-8156. Thank you for watching. Again, see you next week. Take care. Bye now.